my name's William Sawadigo. I'm going to talk a little bit about what's going on with specialty crop markets and some of the economic factors that are going on. So I'm going to talk a little bit about the macroeconomy, some of the overall factors we're seeing. I'm going to try to relate it back to how some of our specialty crop markets have been affected and how they might be moving forward. Then I'm going to turn to talk a little bit about some of the input issues we're seeing, especially labor, and then close out by saying kind of what we expect to happen in fruit and vegetable markets going forward. So starting off just really broadly with the macroeconomy, we've seen GDP really increase recently. During the pandemic, we saw a sharp dip, starting around March of 2020. We have seen that V-shaped recovery. We're back basically where we were at the start of the pandemic. And so that's been important because we've seen our housing market really pick up. And so for some of our nursery greenhouse industries, when people are buying new houses, that's sort of when we really start to see the purchases of plants and stuff like that really pick up. So those industries have been really strong. They were strong during the pandemic when people were staying at home and doing more gardening, but they've remained strong because of all the new housing purchases and developments we've seen over the past year. Now, shifting to a broader farm income measure, just trying to gauge what the farm economy is looking at, I like to look at net farm income. That's sort of a broad measure of profitability. So this isn't necessarily specialty crop specific, but it includes all of agriculture in the US. And the big focus here is the jump between 2019 to 2021. So coming off our last commodity boom, we'd really come down in terms of our profits in the agricultural sector, but we've seen those increase by about 20% each of the last 2 years. The first year was mainly driven by government payments, but last year government payments were down by actually 13.5%, or they were down by about 40%, but we've still seen income increase by 20%, mainly because of increased cash sales. And so overall, the farm economy, we're sort of in the best place we've been since around 2013, kind of when we tailed off that last commodity boom. Inflation, I can't give a talk about economics nowadays without talking about inflation. And so we have seen, really over the past decade, we'd seen inflation numbers in the middling, 3 to 5% range, sometimes lower month to month. Compared to the past year, we're up about 7.4% as of January of 2022. And so starting towards the end of 2021, we'd seen inflation increase from about 4% to 5% to 6% and remain really high. And so that's affected a lot, both on the input side in terms of some of the costs that we've seen increase. I'll talk a little bit more about that in a bit, but also in terms of what people are buying. And food price increases have increased quite a bit. It's largely been meat. Beef prices are up about 20%, but we've seen fruit and vegetables still up about 6% compared to the last year. And so looking at how that's affected some of our produce sales, I like to look at scanner data from, this is from IRI. And so it shows grocery level store sales and compares them to the point where we were last year. So this is just looking at January of 2022 compared to 2021 and 2020. And so we can look at, if we look at the far right columns, we have units versus 2020 and units versus 2021. Compared to 2020, pre-pandemic, we're still up. We're still up about 3% in our total purchases for both total food and beverages, but also if we look at the bottom row, fresh produce is still up about 3.3% compared to where we were 2 years ago. Compared to last year, though, we're down about 4.3%. So we've seen consumers shifting compared to where we were in 2021, really shifting away from really buying less of our produce. But the big takeaway here is looking at dollar sales. We're still up about 4.5% for produce, about 6% for frozen goods. And so the main trend I'd like to focus on there is we're seeing people are buying less, but because of those higher prices, fruit and vegetables are still getting a lot of money there. There's also been a slight of a change between shifts from fresh produce to frozen, possibly because of the higher prices. People who are more constrained in their budget will shift to some of those lower cost items and shelf stable ones as well. Now shifting to inputs, inflation, we've seen overall, looking at the farm economy as a whole, we've seen prices received increase about 20%. This is since the start of 2020. So we've seen pretty sharp increases in what we're getting for our sales of our produce, our crops and livestock and produce overall. But we're starting to see those prices paid really increase. So the data are a little bit old. So they're not really covering the start of 2022 in terms of what farmers are actually paying currently, with fertilizer prices up over 100%, fuel up around the same amount too. Some of our, pesticides and stuff like that are up quite a bit too. So we've seen those prices paid increase by about 5%, but those are expected to increase further as we really start to see what people are currently paying and how those will affect sort of input costs and total costs for running operations. Another huge expense for specialty crops is labor. Labor is a sizable expense for all of agriculture. Looking at all farms, it accounts for about 10% of total sales. So about 10% of total sales are being spent on labor for farms across the US. But when we look at our specialty crops, we look at nursery and greenhouses, that number is up, it's been in the 30 to 35% range recently. For fruit and tree nuts, about 30% of what we get in sales is spent on labor. And for vegetables and melons, it tends to be in that 20 to 25% range. So the labor issues have a larger impact on our specialty crop industry than they do on some of our other types of operations. And so that's been a problem, especially because we've seen unemployment rates be unusually high. We saw during the most recent recession, unemployment rates peaked at about 14.7%. Prior to the pandemic, they'd been coming down the past decade, as the economy had strengthened to about 3.7%, 3.5 to 4% really is where they'd sort of been over that territory. We've recovered a bit. We're now down to about 4%, but that kind of hides the fact that we've seen a lot of people exit the labor force. And so, unemployment rates, again, is sort of the percentage of people who are actively looking for jobs that are unable to find them. And so if you're no longer actively looking for a job, you drop out of the unemployment rate, but you would still remain in what I like to show as the civilian, the labor force participation rates. And so that shows the percentage of working aged Americans who are part of the labor force. So that is that they're actively looking for a job. And, what we've seen is we'd sort of reached a steady state, prior to the pandemic, about 63% of Americans were in that were in looking for jobs there. That's dropped quite a bit. We're now down to about below 62%, so dropped about 1 percentage point there. So that's part of the reason why we've seen more of these labor shortages that have really picked up recently. And so, as a result of these labor shortages, we've seen a lot of interest in the H-2A program. This is something that's really picked up over the past decade. In 2010, about 75,000 positions were certified annually in the United States as a whole. That's jumped all the way up to about 250,000 as of 2019. A lot of our strong producers of specialty crops are really relying on this program. And, although Alabama isn't one of the top users of the state, we have seen a lot of interest recently on this program, especially as those labor shortages have really intensified. Now, I'll close out by talking a little bit about what we expect with fruit and vegetable production moving forward. And so we've seen over the past 5 years or so, fruit and nut value has been about $30 billion annually in the United States. We've seen vegetables be worth about $20 billion. Moving forward, we've seen pretty sustained consumption. So looking at per capita consumption of fruit and vegetable products, it's remained pretty steady over the past few years. So looking at projected growth in the industry, we're really looking at increases in population driving that. And so we are expected to see pretty steady increases in fruit and vegetable consumption and sales over the next decade, again, mainly driven by population growth. Now looking at where we've been the past 3 years, I like to look at basically what sales look like quarter to quarter. And this data again shows grocery store sales. And so looking at both dollar sales and volume sales. And so these black bars up there are showing versus 2019. So kind of comparing to where we were before COVID. And then the other bars, these two lines are showing compared to the same period the previous year. So what we really have seen is from early 2020, we saw really huge increases in our produce sales and volume. So we were up about 10%, up 15%, up 12% quarter to quarter. Last year, we saw those come back down, but remember, that comparing the second quarter of 2021 to the second quarter of 2020, we were up about 15% in 2020. So even though we were down about 8% in 2021, we were still up about 6% compared to where we were in 2019 and prior. So we have really seen our produce sales remain solid, at least at the grocery store level. During the pandemic, looking at some of the survey data, we saw a lot of people were buying local produce. There was that shift towards local demand. So I know this data kind of hides that fact, but that's something we had seen in the past year too. And so with this data, my question is sort of, we've seen strong demand in grocery stores. January 22, we're still up about 3% from where we were before. So really strong volume sales, up 16% in terms of dollar sales. But being in Alabama, a lot of our sales are not in retail settings necessarily, but in farm stands and farmers markets. And, so I'm interested to see if this year we'll continue to see that strong demand as we did last year, or if, because if that will follow kind of what we're seeing in grocery stores and we'll see that continued pattern. So, I'll conclude real quick by saying one of the big things I'm watching out for is how long this inflation will persist, where I tend to think it will come down a little bit, instead of being at the 7% range we've been compared to last year, we might see those numbers come down towards the norm of what we've seen more recently in the next few months or so. But a lot of that will depend on the supply chain issues we've seen getting resolved. And that'll be important because we have the production impacts, lack of access to fertilizer or expenses for fertilizer really increasing, and a lot of other inputs, machinery, stuff like that. But also the consumption changes. So how much are consumers really going to change their shopping patterns if we do see this inflation increase long term? Are they going to shift from what they're purchasing weekly? Are they going to keep buying what they spend, or keep spending what they spend, but just buy smaller quantities of it? But overall, we have seen that continued strong demand for produce that really picked up at the end of the beginning of 2020 since the end of 2019. And so that's sort of the good news looking forward in terms of what we've seen in the specialty crop industry. And I should mention nursery and greenhouses have seen that really strong demand too. So thank you all for listening, and I'd be happy to take any questions.